All right, guys, corporate profits are coming out. This is earnings season. It's obviously a very exciting time for us as a channel because we like to do the individual earnings reports after hours. So definitely watch for that. Subscribe to the channel to check that out. Now, if you have our software, if you scroll down to the bottom here, not even the bottom, we have it by, you can open the date, the calendar, and it shows you the companies that are reporting before close, before open, after close, and you can just scroll in there so you can keep updated on which companies are reporting. So, Mo, what have you been hearing about corporate profits this upcoming earnings season?
It's supposed to be falling.
Allegedly. Yes, allegedly.
That's what they say.
Okay, so what do you say allegedly?
I mean, if the masses, including like CNBC, Fox Business, and everybody's on the same page, I tend to think it's probably not going to be that.
Yeah, I agree, but it does make sense.
It absolutely makes sense.
You know
what's the unfortunate part?
Yeah.
We were on a good track because the banks usually give some type of inkling where things are going. Then the whole Silicon Valley Bank thing happened. Everybody did inflows into the big banks. It kind of threw everything off.
Right.
I mean, I look at the big banks and people are like, oh, they did great out there. It's like, well, there was an incredible event that happened where massive inflows flew into the big banks.
Well, yeah, but it is a good thing for those big banks to get that new money. Because how hard is it? I mean, it's got to be very hard for JP Morgan and Bank of America to pull in billions of
that type of money. They need some type of catalyst event.
100%, 100%. So, guys, now here's why I say so. First off, interest rates are increasing. Yep. Okay, that's going to cause corporations' interest expense to increase. But the other thing I want to show you is this little chart here. This is corporate profit margin as a percentage of GDP going back to 1960. All right, the historical average is about 7.1%. We're currently at 10.4%. Now, since 2004, we've been elevated above 9% pretty much the entire time. So the question becomes, are we in a new normal? I could see the argument for that, right? Mm-hmm. More service-oriented businesses than back here.
Yeah.
There's a lot of manufacturing.
Yep.
This is a lot more service-oriented.
Yep.
Okay? Now, obviously, our job is to decide to look at overall profit margins, and during recessions, which... Guys, we're probably closer to recession than we are to not a recession, from COVID times.
I think that's something everybody can agree on.
Yeah, but
the majority can agree on.
But the difference is now we actually have a Fed who's basically trying to cause a recession.
Right.
As much as they're going to deny that.
They almost say it.
Do they?
Yeah, I mean, they're basically saying they want job losses. They want unemployment to go up. I mean.
Yeah, but then they say, we're going to have a soft...
They do talk out of both sides of their mouth.
And by the way, their job is to provide the soft landing talk. They still, as much as they're not supposed to be political, in the world now, 1960s Fed, Paul Volcker, back in the early 80s, he sat there and said, listen, here's the deal. Inflation sucks. I'm raising rates. Suck it. You know why? He didn't have Twitter and CNBC and all these people harping on him. He just did what was right. It's very tough for Powell. Look at Powell. Powell was talking about raising rates until Trumpy, your buddy, got into office, and then Trump basically, strong-armed him into not raising rates.
Yeah,
right?
And Powell cowered down like a little bee.
I don't get this. You agreed with the method of raising interest rates, but then when Trump came in...
I didn't agree with Trump.
I know you didn't.
Powell to stand firm on that.
How was he going to stand firm?
Say no. You're independent of politics.
That's the problem. You're supposed to be. You can't be.
Yeah.
Everybody, we have Powell on TV getting blasted by these people who have no idea what they're talking about. These House members and Senate members.
It's amazing to watch this.
Amazing, isn't it?
I love it. I love going on YouTube and watching these Congress people ask questions.
It's incredible.
It's awesome.
Now, the other thing I want you guys to know, Mo and I don't give an F about earnings season. Now, you might hear that right now and going, what the hell? We still report on it. We still give insight to it. But our goal and your goal should be to buy great companies at good prices and to normalize their earnings. What do I mean by that? It means don't assume their best years during the best booms as their normal profits. If you see in our software, there's a reason why in our stock analyzer tool, let's pull up a company like Apple. In our stock analyzer tool, we show 10-year numbers. Because most times 10-year numbers have a recession in there. We didn't really have one. We had COVID. But the whole point is to sit there and look for skews in profit margin. Now, their free cash flow margin for Apple has been very consistent. But the key, whenever you buy, if I were to tell you right now, come buy my business, here's the last year of data, and it was a record year, wouldn't you be a little apprehensive about that? Unless there was a good story. Hey, profits were up Because revenue is up. Yeah, but why was your profit margin 30% versus 25? I don't know. But that's what Mo and I are trying to do. That's what we're trying to teach here. Is about looking at a company and saying, okay, there are going to be highs and there are going to be lows. How are they going to look over 10, 15, 20 years time, right? Yep. So that's why earnings season make us laugh. We use earnings season as an opportunity that when companies barely miss and people punish them 10, 15, 20% on their stock price, we look at it as hopefully an opportunity to buy as long as the company falls to the right price.
Yep.
It's been a while since that's happened, right, Mo?
It has been a while.
You know, the biggest one we saw was when Meta started to slow down its growth, and it just plummeted from there, right?
Yeah.
We looked at that saying, okay, this is great. Now, we want you to be like-minded with us. We want you to still pay attention to these things, but as an opportunity to buy when things barely miss. Because guess what, guys? Companies are going to miss. If a company always beats, you have to start questioning the accounting at the company. Right, Mo?
Yeah. Or when you have a company that is missing because expectations were so high because COVID levels are still there. They want them on top of COVID levels, but they're really just coming back to normal.
Yeah.
That's a perfectly fine miss too. I look at that and say, oh, okay, profit margins are shrinking, but they shouldn't have been where they are.
Yeah, correct. Because COVID made some businesses absolutely boom and some businesses absolutely collapse. Just like you look at Southwest Airlines and their revenue fell by 90%, whatever the number was, 95%. Yeah. Are you really going to gauge them on, you wouldn't gauge them on that low number, just like you shouldn't gauge them on the highest of high numbers. And if all of a sudden the US government said no one's allowed to travel more than one state away by car, you have to travel by, and it's first I'm making something up, but they come up with some temporary law stating that. You can't possibly value airlines based on that 1 year time frame when they make it a temporary law. Right. So if this makes sense to you, and you're liking what we're saying, tomorrow, 12:30 p.m. Eastern Time, April 18th, we're having a free webinar on the 4 biggest mistakes investors make. It's absolutely free. Just sign up at the link below, and we talk more about all these things and how we look at investors because we see, especially with this channel and our huge community in here of thousands of people, and these people are all like-minded, but we still see human nature rearing its ugly head. And we do think that the future for stocks in the next 5 years or so doesn't look as good as the past 5 years. But we've been wrong before, but we're gonna give our reasons for this and how we can sit there and help you through that. So again, tomorrow, 12:30 p.m. Eastern Time, sign up the link below for free. Now, back to earnings season. I cannot stress enough how some of these big companies, let's check out some of these big companies. Yeah. All right, Schwab just reported today. Who's reporting this afternoon? Anybody big?
Nah, nobody too big this afternoon.
Okay.
Tomorrow is really...
Johnson & Johnson, Bank of America, United, Netflix. Yep. Oh, wow. Tomorrow's huge.
We have Lockheed Martin, Goldman Sachs.
Oh, wow. Some big banks coming in.
Interactive Brokers, yeah.
Wowza.
And continues into Wednesday, having Tesla, IBM, Morgan Stanley.
So
Abbott.
Tesla's going to be the big one.
Tesla's going to be the big one, U.S. Bank. And then Thursday, Taiwan Semiconductors, CSX. CSX is going to be interesting with all of the very public train derailments that were happening. It's going to be interesting to see.
Weren't you putting pennies on a bunch of train tracks trying to derail some trains here in Ohio?
FBI, that's not true. We have to basically tell the FBI we're joking in every video we make now.
Video. FBI or SEC. You know, PPG, Pittsburgh Paints, that'll be a good one to see what people are spending money on in their houses. Guys, it's amazing. Interest rates went from 2.6% to 7%. Literally in our area, in Ohio, considered a boring area, you are literally fighting people still for houses. Yeah. I'm just perusing lake homes in North Carolina. Literally, home comes for sale, sold in contract in a matter of days.
Yeah. The town that I grew up in, we were at dinner with a friend the other day, and he said there is not a home that is not 7 million, that is under $1 million, seven figures. And I was like, there's no possible way.
So he changed it to one home.
One home.
And we looked it up.
Checked it, one home. Every other home is either pending or contingent.
This is in a city, a suburb of Cleveland.
This is not $1 million city.
Yeah, and that's the funny part. So guys, remember, there are ebbs and flows. In the same way, we're going to look at that real estate and make determinations based on what we see, the same way you should look at earnings and earnings season. So guys, subscribe to the channel, join us on the webinar tomorrow. It's a great way for you to just get a feel. It's gonna take some time to get acclimated with a certain thought process, just like me. I didn't all of a sudden flip one day and go, oh, this is perfect. It took time around the right people, but eventually when it clicked, even more as time went on, my feelings of calm occurred and excitement occurred when I saw stocks fall. So guys, thank you very much for your time.